Welcome to the Refurbishment Mastery podcast with me, Martin Rapley. If you're a property investor who is worried about paying too much for your next property, concerned that you don't know how to manage a refurb, or scared that you will be ripped off by a builder, then this is for you. In this podcast, I share over 30 years of experience of managing refurbishments and conversions to help you make more profit, save your time, and ultimately enjoy the process. On with the podcast. This episode is all about VAT and how some of your projects may not attract VAT at the standard rate, which is currently 20%. Now, I'm not able to give you advice relating to VAT. All I can do is go through the current HMRC guidelines, which are actually set out in VAT Notice 708. What's really important to understand is that these regulations can change at any time. So you do need to keep your finger on the pulse. But at the time of recording, this is my understanding of those regulations. And based upon my understanding and interpretation, I'm going to give you some guidance and support around particularly projects where VAT is not subject to 20%. So that 20%, by the way, could very easily be adjusted by the government in any budget or even special budget or anything like that. So in my career working in construction, I would think VAT has probably changed 5 or 6 times. And I'm sure some of you can remember that it was 15%, it was 17.5%, it's currently obviously 20, but it has changed between those different rates at different times. Now, I'm not going to talk too much about the 20% rate. This is very much about projects where there is an opportunity to pay less than 20% VAT. And currently, within HMRC legislation, within that VAT Notice 708, there are 2 other percentages of VAT that can be applied to certain projects in certain situations. I'm very quickly just going to talk about one of those, and then I'm really going to focus on the one that is related to refurbishments and conversions. Now, if you are building a brand new property, so we've got perhaps it's the garden of an existing property, and you're going to build a brand new house, then the construction of that house does not attract any VAT. So we call that zero rated, so 0% VAT effectively. So the builder only needs to charge you the net cost and there is no VAT. I'm not going to say too much more about that. It's going to come up a little bit in passing, but that's fairly obvious. That's fairly cut and dried. We've got a virgin piece of land and we are building a brand new house on it, or indeed that could be a block of flats, so multiple dwellings. It could be a terrace of houses, but importantly, it is residential. We really want to focus on the other VAT reduced rate, which is a 5% VAT rate, because this is much more applicable if you're refurbishing or converting buildings. It's also for some a little bit more complicated to understand. And I'm just going to unpack some of the situations and scenarios where your project may be subject to 5% VAT. Now, of course, you're welcome to read the HMRC guidelines, VAT Notice 708. I have to say, it's not overly complicated to follow, except there is a huge amount of content in there, a huge amount of text in there. And what we're particularly interested in as property investors is buried here, there, and everywhere. So I'm going to try and summarize those salient points for you now. So I like to consider that 5% VAT applies in any situation where we are adding or creating additional residential units. So that's my simplified interpretation of how we ascertain whether VAT might be at 5%. Are we adding or creating additional residential units? So if we have a single house, so currently it is one residential unit, a family could live in it, and we split it into two flats. So we've got a ground floor flat and a first floor flat. We have gone from one residential unit to two residential units. Therefore, our refurbishment is creating additional residential units. We've gone up by one, and therefore that whole refurbishment slash conversion is subject to 5% VAT because we've gone from one to two. We have increased the number of residential units. So that, I hope, is reasonably clear, reasonably cut and dried. Let's look at another scenario. We've currently got a shop unit with which is zero residential units. No one can live in it at the moment, and we're going to convert that into a flat. And so we're going from 0 to 1. Therefore, again, we are adding residential units. The VAT is subject to 5%. So that's reasonably clear and obvious as well. And of course, we could have an office building that we get planning permission to convert into 4 flats. And likewise, that is increasing the number of residential units. But there are some slightly more complicated situations that we can also apply the 5% to. And this is where we just need to be a little bit more aware. But significantly, this is where, with this additional knowledge, it may open up some further opportunities for you. Because, of course, when you're running your numbers, when you're calculating how much you can offer for your the original property, you're potentially saving 15% of VAT on the construction works if you know some of these other little angles. So the next thing I'm going to talk about is HMOs, houses of multiple occupation. Now, if we have a single house, so one family unit lives in a single house, and we reconfigure that house and we start using it as an HMO, either a C4 HMO up to 6 residential units, or a sui generis HMO, 7 or more residential units, we are going from one residential unit, a family house for one residential unit, to more than that in our HMO, 5, 6, 7, however many rooms we get from this house. So that conversion work is also adding additional dwelling units, and therefore is subject to VAT at 5%. Now, again, sticking with things that are just a little bit more complicated, let's say you've got a block of flats and you want to convert the roof space, so effectively a big loft conversion, and create another flat up in the roof space. Well, because we're creating an additional flat, we are definitely subject to 5%. But unless there are the only works that are connected with that conversion are the only works that can be reduced to 5%. So you can't refurbish the rest of the block because there's already flats there. That becomes a standard refurbishment of 20%. But the works in connecting the new flat up in the roof through, which may be reconfiguring one of the flats, that's fine. You can reconfigure that flat and refurbish that flat as part of it. You're going to need to put in a staircase, and there may be some other modifications that are needed at the staircase level. So all of that is subject to 5%, but only the bit for creating the additional units, because you've already got units in that particular building. So if we go back to the shop example, where we've got a shop on the ground floor and maybe 2 flats upstairs already, we can't refurbish the flats upstairs and get that at 5% VAT. We can convert the shop element at 5%, upstairs that refurbishment, the improvement of those 2 existing flats, because we're not adding more residential dwellings up there, they're subject to 20%. So we can get projects where some of the project is subject to 5% VAT and some of the project is subject to 20% VAT. So what you need to be thinking about is your project adding additional residential units? Come away from additional people, because of course a single residential unit, a family house, if we build an extension onto the family house and now more people can live in it because it's got an extra bedroom, that is still considered one family unit. So if we do that, that's 20%. If we do a loft conversion in an existing house, it's 20%. If we refurbish an existing flat, it's 20%. Even if we refurbish that flat and we convert it from a one-bedroom flat to a two-bedroom flat, because it's still considered one family unit. That family unit might only be one person. As a two-bedroom flat, it might be two, or maybe even include children as three, but it is still a family unit. So think about it from family units. How many additional family units are you creating, or have you managed to create some additional family units? Now, there is another situation where we can also reduce the VAT to 5%. And this is when properties have been empty for 2 or more years. Now, you don't have to have owned the property whilst it's empty. So if there's a property that's stuck in probate and has been for a while, for whatever reason, it's been owned by the family and not being used, then you can also, or all work to that property is subject to 5%. Even if you're only refurbishing that rundown property as a single family unit, because it's been empty for 2 years or more, the VAT is reduced to 5%. And the whole thing here is the government are really incentivizing us to either get property back out in use or to create additional residential units. So it's a good thing for the country as a whole, and we are incentivized because we only have to pay 5% VAT on those works. So perhaps now, when you're looking for properties, there may be some other angles there. There may be some different ways of keeping the cost down that perhaps you hadn't been aware of previously. Now, there are some other rules that I just need to make you aware of in here, and then I'll just go through the mechanism for actually making this work. So some critical rules that you need to be aware of here. This 5% adjustment does not relate to demolition. So if you have to demolish an existing building to build your new house, then the demolition element is still subject to 20%. But if you have to just do some stripping out as part of converting a commercial to a residential, then stripping out is at 5%. So separate between demolition and stripping out, because stripping out is part of the work, because we're not demolishing the whole structure. Now, also, temporary work and plant isn't included in the reduced rate. So in theory, your scaffolding and significant mechanical plant, and that's quite hard to say on big projects. That might be a crane or something like that, but on a lot of the things we're doing as property investors, there won't be a great deal of plant. But the obvious bit of plant is some scaffolding, and under the regulations, the scaffolding is subject to VAT at 20%, because it is temporary work, not permanent work. The reduction also includes fixtures and fittings. So fixtures and fittings are those elements of the property that are not permanently built into the property. And the things that these include are carpets and vinyl, only carpets and vinyl. It doesn't include, so you can get 5% on hard floors, because they are fitted before the skirting, so therefore they are considered as part of the structure. Carpets and vinyl that we can change is not subject to 5%. Other things that aren't 5%, freestanding appliances in your kitchen. So washing machines, dishwashers, fridge freezers, if you put those in and they're freestanding, then they're subject to 20%. But if they are integrated and part of the kitchen, then they're subject to 5%. Wardrobes and furniture and things like that, for your HMOs, they're all subject to 5%. But if your wardrobes are built in and they are part of the structure, which basically means the walls, the doors are wall to wall, and it's all part of the structure, then those are subject to 5%. If you buy a kit from one of the suppliers and pretty much just screw it together on site and screw it to the wall, that is considered a fixture or a fitting, so that's not included. Shelving and things like that aren't included as well. Curtain rails and curtains, that's all subject to 20%. So it's things that are built into and pretty much go with the property as part of the building works. And then the other cost that isn't included is the cost of your consultants. So your architect, your quantity surveyor, your structural engineer, project managers, building control surveyors, any other consultant that you employ is subject to VAT at 20%. So it's only the build element that can be reduced to 5%, or with new build to 0, that we can actually get this benefit on. So you can't get it from any of these other bits and pieces. And you'll get some guidance and advice from this from your builders, and I'll explain how that can work as well. And of course, it's all in that VAT notice 708 that I mentioned earlier on, which you're welcome to find. You'll find it on the internet, easy to find, and as I say, relatively easy to read back through. So let's look at how the mechanics of this operates. So if you happen to be a VAT registered business, then you can claim back the 15% or maybe the 20% after the builder has done their work. I would think in most cases, if you're listening to this as a property investor, your business is not going to be VAT registered, because we don't need to VAT register businesses that are operating with tenants with ASTs. Now, if your business is in serviced accommodation, you may have elected to register it for VAT. And if your business is as a developer, you may have elected to register it for VAT. And so if you've got a VAT registered business, you can do this, you can carry out this work, you can employ your own team to do the work, you can employ subcontractors to do the work, you can employ a main contractor to do the work, and you can deal with this and claim back that 15%. And your VAT advisor will and bookkeeper will help you carry out that process, and that will be swept up as part of your quarterly VAT returns. Now, because most people listening to this podcast, I'm pretty certain, are listening as property investors, it's highly unlikely that your businesses are registered for VAT. So the way that you make this legislation operate for you is that you must engage a VAT registered contractor. Now, the threshold for VAT, the current threshold for registering any business for VAT is 80-something thousand. So any business that is carrying out a number of construction projects in a year is going to get to that 80-something thousand. Can't remember the exact figure, but they're going to get to it, relatively quickly. Most proper contracting companies are over that after 6 months or so. Not all of them, and some businesses are brand new, of course, and don't need to register until they get to the VAT threshold for registering. But what you need to do is find a business that is VAT registered, and they will administer this process for you. The first thing they're going to need from you is some evidence that your scheme is subject to VAT at 5%. And whilst they may fully agree with you that it is 5%, they do need you to provide the evidence. because it is them that are making their quarterly VAT returns, and it is them that will be investigated by the HMRC to see that their quarterly VAT returns have been done correctly. And what they need is evidence from you that they were correct, or they are correct, to only charge VAT at 5%. Now, if you've got planning permission for your project, so your project of converting a shop into residential, or converting an office into residential, reconfiguring your house to make it two flats, or you've perhaps got planning permission for sui generis, or even in an Article 4 area, you've got planning permission for your HMO, then that is good enough evidence. So all you've got to do is show to your builder that here is the planning permission I've got. This is the evidence you need that we are converting one thing into another thing, and it is therefore subject to 5% VAT. If your project, if you are converting a house into a C4 HMO under one of the permitted development or prior approval routes, then the builder is going to ask you to sign a certificate, and you'll find those pro formas of those certificates in the VAT notice that I was mentioning earlier on. But they'll ask you to sign a certificate which basically says you confirm that you are going to use this building as an HMO, a C4 HMO. And if you subsequently choose not to, that you will make good and effectively pay the VAT that's been set off, because this does not apply for regular residential units or even a refurbishment of a single let house. You don't get the benefit. So the builder may well ask you to sign a certificate. Now, if you're looking at claiming VAT based on 5% only because the property's been empty for 2 years, then you need some evidence of that. Evidence I've submitted for that in the past, in fact, the best evidence in the past used to be demonstration that there had been no council tax paid on the property. But now a lot of local authorities are actually charging council tax on empty properties, then that's harder to establish. So you may need to look at something that demonstrates there's been no usage of any electricity or water. So could you find some electricity bills that only show a standing charge and perhaps a tiny little trickle if there's been an emergency light on, or there's a fire alarm panel or something like that? And if you can demonstrate that that is not the normal amount of fuel use, then that could be a really good thing. Maybe you can demonstrate that the property's actually been on the market for a long time. Maybe the estate agent first advertised it 2 years ago and it didn't sell, and then it got stuck in probate, and then something else happened. So maybe there's some other evidence that you can find. So look for this evidence. And if you're buying a property on the assumption that the VAT is only going to be 5% for the build work, then make sure as part of buying the property that you actually get the evidence you need, because trying to find it retrospectively is going to be hard work. So maybe wrap that up into your negotiations with the vendor. So you do need to provide some evidence for the builder, but with that evidence, the builder can now charge you 5% on the works or the element of the work. Remember, I said there's some elements of the work that are not subject to 5%, and that could be part or even of the bigger scheme if you're refurbishing some existing flats as well. So make sure that the builders got what they need, and the builders will invoice you 5% only. Now, just for your awareness, the builders themselves actually pay 20% for everything they buy. So if they buy some timber as part of doing your work to convert your house into two flats, they pay 20% on that timber. They sell it on to you as part of their quote at 5%. And once a quarter, at the end of their VAT quarter, they will put those figures across to HMRC. and an HMRC will adjust, or there'll be a calculation made of how much VAT needs to be passed on to HMRC. Remember that the builders are not incurring any VAT on the labour element of the work, because that's their own team and no one's charging them VAT on the labour element. So they're not going to have cash flow problems. There's more recent legislation within construction that means that contractors, if they subcontract to another company that's VAT registered, they don't have to. Those companies further down can administer the VAT for them. So a contractor that says they're going to get themselves in cash flow problems as a result of this probably isn't understanding the big picture. It's not a system that really should should lead to cash flow problems, unless perhaps you're doing a new build project, and for some reason they're outsourcing a lot to contractors that can't pass the VAT adjustments, further up the line. You don't need to get too involved with that. Importantly, the decision of charging a reduced VAT is actually totally with the builder. So if you're talking to a builder and they do not accept that your project is at 5%, then they will charge you 20%. So you need to be having this conversation with your builder in good time before appointing them. And I've certainly had situations where two builders have quoted. The one that looks to be the cheaper is saying that VAT is 20%. And as a result, the one that looks to be more expensive actually ends up being cheaper overall. So do the comparisons, and there's no way you can force a builder to charge this at 5% if they don't believe they can, or they don't believe that it falls under the legislation. Even if you give them all of that legislation, ultimately it is their decision to, as to the rate that they apply. So you may need to change builders if the builder you're talking to doesn't believe that this is even possible. Because, by the way, some builders just have never ever heard of this, and they think you're just fiddling the system. Now, some other things to be aware of here is that if you buy anything yourself for that refurbishment, you are also going to have to pay VAT at 20%. So if you pop down to the kitchen supplier and buy the kitchen, you will not be able to claim back that 15% unless your business itself happens to be registered for VAT, which, as I say, is probably not the case. So whilst you can go to the kitchen supplier and you can do all of the legwork, you can choose the layout, you can work out what you want, you can get a quote for it. If you want to get the benefit of VAT at 5%, you must then pass that on to your builder and ask your builder to buy it. Have a conversation with your builder about the mechanics, because sometimes they haven't got the credit terms, and you sometimes need to find a little solution in here, which could be that you pay the builder immediately. Some merchants will be happy to take your credit card details on behalf of the builder, but the important thing is that the invoice is made out to the builder and the builder then charges you on. But there are some little loopholes and there's some ways you can make that work. But it's about understanding those ways, understanding how it works, and talking to your builder in good time. This is not something to be running around on at the last minute. So that's the basic overview of the regulations as of the recording of this episode of the podcast. You no doubt, if the regulations will change, I and numerous other people within property investing will be writing and doing blogs about it, and I can update the podcast accordingly. So listen out for changes. It is not unknown for changes to be made, and it's totally out of our control. It's central government and HMRC making these changes. But the important thing is, if you understand the regulations, and you are aware of how this operates, then potentially the cost of converting some buildings is cheaper than it would appear on paper, and I suspect cheaper than some other less experienced property investors believe it's going to be. And as a result, there could well be some opportunities opening up for you that you may have discounted so far because you couldn't get into the stack. But now I've helped you take 15% off the build costs, perhaps they do stack. So good luck looking for those deals. And yeah, I really hope that just listening through this episode has helped you understand a little bit more of the complications of the VAT regulations, which are, as I say, all wrapped up into VAT Notice 708, which you are welcome to have a look at on the internet and read and digest. But I've given you a summary here that I hope will help you avoid having to do the hard work of reading all of those particular details. So all the best, and I look forward to catching up with you on another podcast.
Thanks for listening to this podcast. Please do like, share, and leave a comment where you can. If you need any guidance or advice with anything to do with your refurbishments or conversions, then don't hesitate to reach out. You can book a free call with me by clicking on the link at the top of my website, refurbishmentmastery.com. There's other ways you can contact me in the show notes as well. I look forward to speaking to you again soon.